welcome back to another episode of Borak Bersama Maybank. We are back today in Malaysia, this time to discuss the topic of a potential interest rate cut in the US and what impact it might have on our local banking stocks. To bring us through this topic today, we have a returning guest from Season 1 of Borak Bersama Maybank, Mr. Desmond Ch'ng. Welcome back to the show, Desmond.
Yeah, thank you for having me.
All right, let's get the audience up to speed on the recent developments first. We've recently seen inflation easing in the US, while their July unemployment rate unexpectedly rose to 4.3%. I think based on this, the news outlets are suggesting that the US interest rate cuts may start as early as September 2024. Does our research team share the same views on this, Desmond?
Yeah, so that is the general consensus, and that is our house expectation as well. Just a little bit of background. Back in June this year, the expectation among the Federal Reserve members was for one rate cut of 25 basis points this year and four rate cuts totaling up to 100 basis points in 2025. So, as you pointed out, recent economic data would indicate that inflation is easing in the US and unemployment is rising, which is why there seems to be more urgency to cut rates as soon as possible. And so the expectation is for the Federal Reserve to start cutting the Fed fund rate in September this year. Right now, our economics team is forecasting two rate cuts totaling 50 basis points this year and 100 basis points in 2025.
Okay, Desmond, our economics team are also expecting Bank Negara to hold rates steady, the OPR rate steady at 3% for 2024 and 2025. So for Malaysian banks, are there any positives to be had from this?
Yeah, so a little bit of explanation is required here. One thing to bear in mind is that Bank Negara had been less aggressive in raising interest rates than the US. The last increase in the overnight policy rate was in May last year, which took the OPR to 3%. In contrast, the Fed fund rate continued to rise and currently stands at 5.25 to 5.5%. This means that there is currently a very wide gap of up to 250 basis points between the OPR and the Fed fund rate. Historically, the OPR has fluctuated within a narrow band of 3 to 3.5%, and therefore the current OPR of 3% is a normalized rate for the country. As such, we see little reason for Bank Negara to cut rates, even if the Federal Reserve does so, given that the current interest environment is conducive to economic growth, and since inflationary concerns persist in the face of the possible removal of petrol subsidies. So typically when interest rates are cut, bank margins compress in short term as lending yields decline ahead of funding costs. As such, in the absence of such rate cuts that could further exacerbate margin compression, we expect the average margins of banks to stabilize with potential upside bias into 2025. Moreover, Maybank's fixed income research team has been and continues to be mildly bullish on Malaysian government securities, forecasting the 10-year MGS yield to decline to about 3.6% by year end from about 3.7% currently amid a strengthening ringgit. What this implies, therefore, is that banks could potentially continue to realize mark-to-market gains on their investment portfolios, which would serve to uphold banks' non-interest income. Moreover, the volatility of the currency would serve to ensure that forex income remains buoyant. So yes, we think that this scenario of falling US interest rates and stable domestic rates would be positive to domestic banks in ensuring that the margins are stable and there is robustness in non-interest income.
Okay, great. That sounds really positive for the local banks. All that said, I think the main question on everybody's mind would be whether foreign flows will come back to Malaysia banks, whether if the foreign investors do decide to take up positions in our local banks, what would be the reason for them to do so? And also, what are the stocks that are in your top picks list?
The foreign investors have gradually shied away from Malaysian banks for several years now, and this is witnessed by declining foreign shareholding levels. We expect Malaysia's economic growth to gather pace from 4.7% this year to 5.1% in 2025, which in turn is actually positive for the banking sector. Coupled with a strengthening ringgit, the decent valuations for the sector, with most banks trading close to -1 standard deviation to mean in terms of forward PERs and attractive yields of more than 5%, we believe that the current environment is conducive for further foreign inflows back into the banking sector as such. The current picks that we have, the top picks that we have would be AMMB, CIMB, and Alliance Bank. Those would be our top 3 picks at this point in time.
Right, thank you so much, Desmond. So aside to the audience, you can catch Desmond's latest banking sector report and many more trade ideas on the all-new Maybank Trade MY app. Remember, if you do not have a CDS or trading account, you can apply for one online in just 3 minutes via the QR code on screen now. If you need a more personal touch, you can also approach our sales representatives and they can help you get started on that as well. So with that, we'll catch everyone in the next episode. But until then, this is Ben signing off.